Standard & Poor's is cutting its growth forecast for the U.S. by 0.5% for 2014. The agency now sees GDP coming in at 2.6% next year. S&P also says it sees the Federal Reserve gradually pulling back on its bond buying program. And as we said earlier, Wall Street is starting to believe the Fed will start that pullback next week at its final policy meeting this year. Steve Liesman has more and what it could mean for the markets and the economy.
A taper by the Federal Reserve at its meeting next week now looking more likely than not. The economic data, the market's reaction to it, and statements by Fed officials themselves all point to a possibility the Fed could move next week to reduce the amount of stimulus in the economy that it provides through bond purchases or quantitative easing. The Fed offered 3 tests for tapering or reducing that QE, and those tests look now to have been met. One of them was confidence in the outlook. 3-month average job growth now risen to 193,000 with those strong jobs report. That's up 44,000 from where it was when the Fed said tapering was a close call in September. The unemployment rate now at 7% is down 0.2 from where it was in the late summer. The end of fiscal uncertainty is another factor. Remember, the Fed wouldn't taper ahead of the potential government shutdown back in September, but now a budget deal looks to be in the works that could put off the debate over deficits for at least 2 years. Meanwhile, interest rates are well behaved as far as the Fed's concerned. Short-term rates have remained low amid good economic news. That's a sign to the Fed that the markets believe that even if the Fed tapers, the Fed will keep the Fed funds rate low. Of course, predicting the central bank's moves has been really tough of late. They didn't taper in September when the market thought it would, and they announced a schedule to taper in June when the market didn't expect it. What the Fed is trying to do is to pivot from using quantitative easing as the main tool to guide or to stimulate the economy to forward guidance and back to the old way they used to do it through the Fed funds rate. Next week could be the beginning of that process. For Nightly Business Report, I'm Steve Liesman.